Hello, welcome to the newest episode of my garage podcast. Um, we're back to the usual place that we are in, that I usually record my things. This week it's going to be going over some stock market stuff, central banking stuff. But first, I want to get into some definitions just to give some background on what I'm going to be talking about and kind of my understanding of it. So the first thing I want to talk about is what leveraging positions are. Leveraging positions is a trading mechanism when you're trading stocks basically, in which you put a trade in, but you don't have enough money or capital to place that trade, and a broker in this situation, a broker lends you the money that you aren't able to pay. And this definition is going to be needed as we get into our first story, which is kind of an important one. On October 10th, kind of the beginning of this week, right? I think it was Sunday or Saturday, last Saturday, one of these days. Um, After the announcement of China's 100% tariffs, there's $20 billion wiped from the cryptocurrency of leveraged positions, meaning that um, the banks didn't they pulled out of those trades. The brokers pulled out of those trades, and the scale of the sell-off might be greater than what is reported because many cryptocurrencies don't do not report liquidation data, meaning that they don't report when people take their money out or they sell their stocks, or when people are making their money liquid, meaning it's cash, having actual cash, having money that they can actually be spent. Um, but kind of a scary thing. Kind of most people are saying this is insider trading. This is um, Donald Trump's sons. Before the statement was uh, before Trump announced that he was making 100% tariffs on China, two accounts made off with a total of $160 million. And with the fall off, um, and this is very suspicious because moments right before these bets were placed, and I'll get into later what people online have been thinking and what's been reported, but basically, with this with this fall off, it is possible to see how closely intertwined the crypto market is with the U.S. because we're seeing now the true value of the actual amount of money that's being put into crypto, not just the amount of money that is being lent by bankers and brokers and all these things. I mean, by the banks and the brokers. Um, and it's possible to see actually how bad, because cryptocurrencies have fallen, like Bitcoin has fallen like 8%, and it's showing now the true value of what the cryptocurrency market looks like, and it's very closely representing what the the US economy is looking like. Everything's falling, prices have lost a lot of money, and it's just um a very scary thing. And last week I also reported why the 100% tariffs were actually why this was actually happening. Basically, China put tariffs on. I mean, not tariffs. They put restrictions on rare minerals, and those are used for many things in technology. And personally, when I see that because of Trump, even though major stock indexes were rapidly rising, people still had faith in Trump because of the fact that he's working with crypto. He's trying to work closely with crypto and saying it's the future of the US markets. But because of this, we're the only good thing that was happening with Trump is that there was a booming crypto market, or the crypto market was staying the same. And now we're seeing the true reports of the crypto sphere, and now we're seeing who who Trump is truly benefiting, and those are the people that are in his board meetings, all these people that are working closely with Trump, like all the people in technology, and it's really crazy to see. And even then, Trump and his three sons token, his cryptocurrency, his currency, which is kind of really, it's really weird that our president is making money off these decisions with him having him and his three sons are having um their own cryptocurrency, and that's World Liberty, but that fell by 30%. And then I also got this information from the Wall Street Journal. A historic, and the title is a historic crypto sell-off erased over 19 billion, but two accounts made off with 160 million. This is by Sam Kessler, Shane Shiflett, and Caitlin Ostroff. Um, and many are online are speculating that those who made off the $160 million are Trump and his two sons. And I would like to believe this, but the whole situation is just really sketchy because this bet, what's happening is, but what's more likely to have happened is that blatant insider trading is happening, that Trump and him and his sons are taking advantage, that are putting, that he's putting the American people in. His sons are taking advantage, making money off of this, but that's what people are saying, that it's insider trading, that Trump, it's blatant insider trading. This is a horrible. I'm not gonna say that all presidents are clean of not having insider trading, but with this being this blatant and being this clear, it's really hard to ignore, and trying to see what Trump is really doing. But also in this article, what makes it weird is that this bet was placed right after China announced that they were putting restrictions on rare materials. So the whole situation is confusing because you can make the case that based off Trump's track record, but this is just a big what if, and it's a big what if it's insider trading, or if they place this bet on the fact that China put these restrictions on rare materials, and just they magically predicted that it was going to happen. But more than likely it's insider trading, and blatant insider trading at that. So the next subject I want to get into is volatility. What is volatility in the market? Volatility in the market is a representation of how fast stocks gain and lose value. For example, if a stock rises and falls more than 1%, it is considered a volatile market. And the way that stocks work is depending on how fast you have the time interval set, because if it's if you have it set like every second, then what it looks like in the stock market is wicks going up and wicks going down constantly. And if it's over 1%, because most stocks in short time intervals, they go like 0.5%, they go like really small percentage, they go up and down. But if stocks are having a bigger opening and closing with losing value, then that means it's a volatile market. And the SIBO index, if I'm saying that, SIBO Volatility Index, or VIX, known as the Wall Street Fear Gauge, is a tool that tracks the expectations of stocks for the next 30 days, and based on what investors will pay for those stocks. In the S&P 500, when investors are scared of the market, they tend to pay up because this means that the VIX will start to spike, indicating the market is swooning, meaning that it's volatile, that stocks are rapidly gaining and losing prices. And as of Friday, the VIX surged to 28.99%, and investors are speculating based off current markets that it will reach 50%. And investors are already putting bets against the market that this may happen and it could lead to a catastrophic market, meaning that it could happen and lead to recessions. Just basically a lot of bad things might happen because the VIX is getting is expected that based off what's been happening with the market, what's it called? Unemployment and all the decisions and policy that Trump has been making, it can lead to even a worse market where stocks are constantly um, losing and gaining value. And experts like Jordan Risotto, the chief investment uh, officer of Gamma Road Capital Partners, says that there's to be more expectations of volatility in the market, meaning basically what I said, prices rapidly changing. And if there is a high volatility in markets, that means that the markets become more risky and stocks are more than likely to lose value, and people are more than likely, in order to not lose value on stocks, to pull out their money. And this could lead to huge sell-offs. But there's still some good news with this. Local banks, I mean, not, I'm getting too ahead of myself, but and even then, local banks are facing steep losses in value, meaning that um, they're not they're not getting they're not reporting good amount of incomes, and they're not getting people investing, putting their money in the market, having liquid assets. So the banks aren't having they don't have as much equity and assets and all these things, and people, and it's raising questions with the economy and making it seem a lot weaker than it actually is. And with that fact, there's been a somewhat of a trade war with China and the US. This could push the economy into recession, making the economy fail. Also, investors are doubting the actual value of AI bets that help push values in stocks with, I forget, is it the S&P 500, the Dow, the NASDAQ? I think it's the NASDAQ, the NASDAQ or the Dow, one of those two, um, are the representations of the top like 30 or top 10 technology companies, and the value of those stocks, investors are speculating what the actual value of those stocks are because of the investments that have been made in AI that have been pushing the value in stocks, and don't believe that the actual value of stocks are representing what they should actually be worth. Like when it comes to stocks, stocks have a key feature that allows them to gain value with future allow them to gain value, and one of these factors is future growth potential. And if an analyst values that with and if an analyst value a company with AI, this can throw off the actual value of the stock, because many companies or many analysts, they believe that, sorry, I'm blanking, because the future of AI, these stocks will represent, because of the future of AI and the investments in these companies, it's thinking that with the future potential that these stocks can be worth a lot more than they're actually being represented. And due to the shakiness of the US economy, these overvalued stocks can be providing false information on how the economy is doing, and if the true value of these stocks get revealed, it could lead to a great sell-off, because investors do not have faith that they will be having a return on their investment, that these stocks are going to be actually gaining value, not losing value. And if this has happened, great sell-offs might happen. But there's been some good news though, like big banks have been recording blockbuster earnings, and with Trump's tax cuts, and this provides even more good news, because it is more than likely to boost the corporate world, more spending because people have less taxes, and it's a good way to boost the economy for those that are actually succeeding. But for the average people, it might not be that good. And Crypto and meme stocks like Bitcoin fell 8% this week, and Open Door Technology uh, fell 5.4%. And the crypto is Bitcoin, and the meme stock is Open Door Technologies. Um, so, um, with this news, analysts stated that this does not, with the fall off of these stocks and major indexes falling significantly, it's analysts, which are people that actually report the value of these stocks, state that this does not point to a prolonged sell off, meaning that people won't sell for a long period of time. They won't sell all their things that they have. They might sell a little bit just because they're panicking, but for the most part, there won't be a huge sell off. And that they're seeing little frost in the market, pointing to a potential good sign, meaning that there's a little bit of growth in the markets, but it's still a little too early to tell. And some investors on the opposite side are speculating the current markets are likely to experience dis- disturbances. Sorry, brain fart. Disturbances, and factors like the president's decisions can cause these disturbances. Sorry, I don't know. Um, and I feel like I say this a lot, but due to the current markets, it could point to a bad thing. But based off what analysts are saying and actual professionals are saying, it might not be as bad as we expect it to be. And then I got this information from Volatility Returns to the Stock Market, and this is from the Wall Street Journal. Volatility Returns to the Stock Market, the Wall Street Journal, and then the subtitles: The Wall Street Fear Gauge touches its highest peak midday level since late April. And this is by Crystal Herr. And also, kind of a funny thing, I think when the government shutdown first happened, people were speculating that it's going to be a month long, and those people are correct. The government shutdown is still happening. People aren't getting paid. Many people are still upset about the fact that, like TSA workers, people in the military, they aren't getting paid. And there's been kind of an uproar about this, and people were placing bets that the government shutdown might be longer than a month, and I feel like I should have bet that, and that would have been a good thing, because based off what Republicans and Democrats have been saying, they've just been fighting and not really looking for a solution. And I don't really know who to blame, and it might not be just to blame one person. It might be to blame the whole, what the hell? It might be to blame the whole system, but for the most part, the government shutdown is still underway, and many people are very upset about this. And with the news of the volatility in the market, people aren't trusting the dollar anymore. Or based off this information, people are looking to invest in futures or actual things that they can invest in, like gold and oil and all these things. Gold is right now, it's hitting record highs after investors haven't had trust in the United States economy. And with this information, the dollar has been hitting an 11-day low against a basket of currencies, meaning that the dollar is depreciating and losing value. And many people, they are investing their money elsewhere, like gold and futures and all these things. And this can be for many reasons, but particularly due to the case of the United States, a weak job market, and policies that have made it impossible to predict what might happen next. But it isn't just the US economy, though. Indexes in Europe, like those of Germany, have fallen roughly like 1% or something like that. Asia too, with China having falling indexes, as well with Bitcoin and many other cryptocurrencies falling. So it isn't just the US that is facing problems all along the world. Countries are facing economic problems, and right now we just have to wait and see what might happen next. And I got this information from the global market, largely down. Gold extends streaks as Fed rate cuts hopes grow. U.S. stock indexes U.S. stock futures fell slightly as safe haven assets demand propelled gold prices, and this is by the Dow Jones Newswire staff. And right now, I feel like, just in general, the world is failing, and it kind of seems like nobody's doing anything about it. And I feel like most people, they get online, all they do is just complain. It kind of feels like, I mean, I can't really say I'm doing much better because I'm doing the same thing, but when it comes to all these people that have been saying that, 1 second. And especially when it comes to the US markets, it kind of feels like nobody's really doing anything. Nobody's looking out for the average person that it's gonna, in order to improve these things. And I don't know, I feel like that it shouldn't be this way. I base, I feel like the reason Trump got voted in is because people have so much hate and they don't want to learn about other people, and I feel like that's what keeps us away from people, is that we don't want to learn about their differences. We don't want to, I feel like that's the thing with many people, is that we, as humans, we're scared. I feel like humans are naturally scared. They don't want to learn about other people because they're scared about what they might learn about something, that they might learn about what they might learn about the other person, that their biases mean nothing, that they're the same as other people. And I feel like, for the most part, humans all around the world, we are the same. We share the same ideas. We share the same hopes. For the most part, we share the same cultures. Like, everywhere in the world, like, especially I feel like when it comes to Hispanic families and Arab families and Asian families and all these families, I feel like at the end of the day we value family, and I feel like there's no difference between us. The only thing that is different between us is the place that we were born, and even then it's just a location where, even though we're halfway across the world, we still share the same experiences. We still go through the same heartaches and all these things. And I feel like there's just so much hate in the world because people don't want to understand other people. They're scared of what might happen or go out of the way. Like, I feel like when it comes to racist people or people that have all these things, I would just say it's a lack of understanding, a lack of wanting to understand another person. And these things that I feel like when people are racist, it's just like, it's I feel like it's just based on nothingness. It's based off one thing that they may be better at, and they make fun of the other person because they do that. Like, I don't even know, but I just feel like the amount of hate in this world, the amount of people that don't want to understand other people, I feel like there's a lack of empathy in the world right now. And I feel like it's going to continue to grow because of social media. Even social media, I feel like it divides us. Like, I always find it stupid that, like, when people say that they invented this thing and now everybody else uses it and they get mad because they don't get credit. But I feel like all that does is create more divide. It creates, like, when the person that says it just creates more hate. Like, why would you say this? Like, I feel like for the most part it's just creating more divide than there already is, instead of accepting that other people have done the same thing, and based off their cultures, they may have not done it because of not wanting to disrespect the elders. But I don't know, it's just frankly, it just feels really stupid to me how much divide there is in the world. The lack of understanding, the lack of people trying to figure out what may be going on in that person's life. And I don't know. I feel like I'm not really much else to say. This week was kind of weird. I have exam next Wednesday and Thursday, and I feel like for the most part it's just stressing me out because every time I feel like when it comes to school it's just like the same thing. But for me, it's an exam for calculus too, and for the most part I feel pretty ready about it. But it's just like, I don't know, the nerves that most people have, like when they're experiencing something new. And I don't know. I think that the difference is people are scared to experience new things. People are set in their ways. And with me, I'm trying something new like this. I feel like I always want to be learning something new, and I feel like learning something new creates a better world. It can create a better tomorrow or a new experience that you may have not had because you felt comfortable. And I want to say that um just try to experience something new. Always try to be learning about the way you do something, and maybe somebody else might have a better idea. Like Ford, um, like Henry Ford, I think he hired people better than him, and he was not afraid to learn. He was not afraid to dream big, to create the first car. And I feel that many people have to be delusional about themselves. We'll never know until we actually do these things. And I just want to say thank you, and I'll see you guys next week.